What I am about to show you has only happened a handful of times in the last 100 years. And every single time it happened, the people who understood it walked away wealthy. The people who did not spent the next decade watching from the sidelines. The Iran War just ended. And I put a lot of research into this video. Real research, historical data going back over a century, market records from every major conflict since World War I, and what I found will completely change how you see this moment. So stay with me, because by the time this video ends, you will know exactly what happened to markets after every major war in history, exactly what is happening in stocks and crypto right now, exactly which sectors are about to move, and most importantly, exactly what to do about it. This is the video I wish someone had made for me in 2009. Let's go. Here is the single most important financial fact you need to understand right now. Every time a major conflict ended in modern history, the market did not just recover, it exploded. Let me give you the data, not opinion, data. After World War I ended, the Dow Jones surged over 88% in the months that followed. 88%. After a war, after destruction, after years of fear and uncertainty, the market nearly doubled. After World War II, the Dow rose 50% by the end of the war and continued climbing for years. The S&P 500 averaged over 10% per year for the entire decade that followed. After the Gulf War in 1991, when Iraq invaded Kuwait, oil prices spiked, recession fears hit, and the market dropped 21%. Then the ceasefire came, and in the 12 months after the war ended, the S&P 500 gained 29%, one of the strongest post-conflict bounces ever recorded. After the COVID crash in March 2020, the S&P 500 dropped 34% in 33 days, the fastest crash in market history. Then the recovery came. In the 12 months that followed, the market gained 75%. Bitcoin went from $4,000 to $60,000. Here is what every single one of these moments had in common. At the bottom, at the exact moment of maximum fear, the news was terrible. The headlines were horrible. Everything looked broken. And the people who stepped forward in that moment, not recklessly, not blindly, but with knowledge, those people changed their financial lives. The people who waited for certainty, waited until it felt safe, missed the biggest gains, because by the time it felt safe, the gains were already gone. Now let me tell you exactly what is happening right now, because this is not theory, this is live. On February 28, 2026, the US and Israel launched military strikes on Iran. What followed was 40 days of war that sent shockwaves through every financial market on Earth. Oil prices surged above $110 a barrel, the biggest oil supply shock on record. The Strait of Hormuz, the single most important shipping channel in the world, carrying 20% of all global seaborne oil, was effectively closed. 12 to 15 million barrels of crude per day were disrupted every day. Inflation fears surged. The Federal Reserve was locked, unable to cut interest rates because of energy prices. Global stock markets fell. Crypto bled for 60 consecutive days, the longest period of extreme fear in the entire cryptocurrency history, longer than Terra Luna, longer than the FTX collapse, 60 days. Then April 8, 2026 happened. The ceasefire was announced. And here's what happened in the next 24 hours. The Dow Jones jumped 1,300 points, its best single day since April 2025. The S&P 500 surged 2.5%. European markets exploded. Germany's DAX gained 4.8%. Airlines surged. Delta jumped 12% in a single day. Shipping stocks surged. Travel stocks surged. Oil crashed 17% in one day, its biggest single-day decline since 1991, the day the Gulf War ended. Bitcoin hit $72,825, jumping 5% in hours. Ethereum gained 7.4%, and nearly $600 million in crypto short positions, bets that crypto would keep falling, were wiped out in a single day as traders scrambled to cover. And underneath all of this, something even more important happened. The Federal Reserve rate cut probability shifted dramatically. Before the ceasefire, markets were pricing just a 35% chance of a rate cut in 2026. Within 24 hours of the ceasefire, that probability jumped to 60% because lower oil prices mean lower inflation, and lower inflation means the Fed can finally cut rates, and rate cuts are fuel for stocks, crypto, and real estate. Now, I want to be very clear with you here, because this is where most financial content gets dangerous. This is a ceasefire, not a peace deal. The Strait of Hormuz is still not fully open. Talks are ongoing in Islamabad. Israel is still striking Lebanon. This is a fragile truce, and it could break at any moment. So the question is not, should I put everything I own into the market right now? That is not what this video is about. The question is, do you understand what kind of moment this is, and are you positioned to benefit from it intelligently? Let me show you exactly which sectors moved after every previous post-war recovery so you know where the history points. Sector number 1, airlines and travel. Every single time oil crashes, airlines win. Lower fuel costs go directly to profit margins. In the Gulf War recovery of 1991, airline stocks were among the fastest movers. Right now, Delta already jumped 12% on day one of the ceasefire. Lufthansa, EasyJet, and TUI all surged over 10% in Europe in a single morning. Sector number 2, shipping and logistics. The Strait of Hormuz closure was catastrophic for global trade. Every ship that was rerouted around Africa added weeks and millions of dollars to delivery costs. As Hormuz reopens, shipping companies that survive the disruption will see their revenues normalize, and their stock prices reflect that recovery. Sector number 3, technology and growth stocks. Here is a pattern that almost nobody talks about. When inflation fears ease and rate cut expectations rise, the stocks that benefit most are technology and growth companies, because their valuations are calculated based on future earnings, and when the discount rate falls, those future earnings are worth more today. This is why tech led every recovery after every major market shock. Sector number 4, cryptocurrency. The 60-day extreme fear period in crypto was caused entirely by external forces, oil, inflation, and geopolitical uncertainty, not by anything wrong inside crypto itself. When the external pressure lifts, compressed assets with strong fundamentals do not recover slowly, they snap back. Bitcoin has already moved from its lows. The key level to watch is whether it can hold above $70,000 through mid-April. That is the signal that recovery is real. Sector number 5, small and mid-cap stocks. Research shows that during the 26 war period, small-cap tech was already outperforming large-cap names. As the recovery broadens and confidence returns, these names historically see the largest percentage gains because they fell the hardest during the fear period. Now let me give you the honest framework that the research supports. History tells us one thing with remarkable consistency. In 19 of the 20 major post-War II military conflicts studied by RBC Capital Markets, the S&P 500 recovered to pre-conflict levels in an average of 28 days after the conflict resolved. 28 days. That does not mean there is no risk. That does not mean the ceasefire will hold. That does not mean you should take money you cannot afford to lose and put it into anything. What it means is this: fear is not a strategy. Waiting for certainty means waiting for the gains to be over. And the window between maximum fear and the first major recovery move is always the shortest window, and always the most powerful. The people who built generational wealth after 2008 were not the ones who waited until 2012 when everything felt safe. They were the ones who acted in 2009 when nothing felt safe at all. Here's what I want you to walk away with from this video. 1. Understand that war to peace transitions are historically among the most powerful wealth-building moments in financial history. Not because war is good, because suppressed markets that have been held down by fear, by oil shocks, by uncertainty, release that pressure when the fear lifts. 2. The sectors that move first are always the ones most directly hurt by the cause of the fear. Airlines, shipping, travel, tech, and crypto were all crushed by this war. They are all positioned to recover as the ceasefire holds. 3. This is a ceasefire, not a guarantee. Manage your risk. Never put in money you cannot afford to lose. The ceasefire is fragile and talks are ongoing. But do not let that become an excuse to miss a moment you will talk about for the rest of your life. Comment wealth window below if this video opened your eyes to what is actually happening right now. And subscribe because the next video on this channel breaks down the specific assets and numbers to watch week by week as this situation develops. I put a lot of research into every single video I make, and the next one is going to be even more important than this one. I will see you there.